Hello everyone, welcome back for another YouTube video. Today we are going to be doing something rather interesting that we haven't done in a while. We are going to be giving you guys our more immediate to further out to potentially bull market target for Bitcoin's price. Now, we haven't done a specific Bitcoin price prediction video in a while. We do cover it regularly in regards to where we think Bitcoin's going, where we have technical targets to suggest Bitcoin's going, and also why it's going there from a sort of macro reasoning. We do cover that pretty much every day in our daily market updates. But in regards to specifically talking about why Bitcoin is going to go up, what are the drivers behind that, we're going to look at, of course, the dollar, global liquidity. We're going to look at Bitcoin in relation to the Dixie. It does well under periods of Dixie weakness. We've spoken in great length about why we're going to see Dixie weakness, why this is going to be good for global liquidity, where we're at in relation to the Bitcoin 4-year cycle. As our kind of reasoning for why Bitcoin is going to go up, you can also then add on fundamentally who's involved in this market now in regards to institutions, the fact that we've seen throughout this recent pullback that we've been going through since really March this year. We've seen aggressive, larger wallets actually continue to accumulate Bitcoin aggressively, certainly recently. There's a whole dynamic to Bitcoin in regards to why it's going to go up, the institutional acceptance of it. And then we'll be going to the charts and saying, okay, well, if we've got all this reasoning to suggest that Bitcoin's going to go up based on what we're going to be looking at, is it technically signaled to do the same thing? And the answer is yes. And we like to use this kind of saying on the channel, when it walks, talks, and quacks like a duck, it's a duck, ladies and gentlemen. Alt season is very much still on schedule, in my opinion. We did a video earlier today in our daily market update. Do go and check that out, where we actually looked at when alt season typically kicks off in relation to the halving. You need to pay attention to the halving and the cycles because they're still being followed. And it's in one sense annoying, but in another sense not. And the annoyance comes from, is it really just that simple? And actually today it really has been. The anomaly, of course, here, we'll look at the Bitcoin 4-year cycles with a BLX as one of our reasonings to expect Bitcoin to go up. The anomaly really is that Bitcoin's gone and put in a high pre-halving. And of course, this has everything to do with institutional involvement. In relation to the altcoin market, still very much where it should be. In relation to these cycles. And of course, we know the anomaly, or the driver of the anomaly, is of course not present in the altcoin market yet, but it will be. So we really haven't done we'll come on to global liquidity in just a second, price prediction video in a hell of a long time. This was back in March 2023. Now, we got back into the markets in January 2023, when Bitcoin was in the sort of 16k range, and we've been very right on the direction of Bitcoin thus far. It wasn't just Bitcoin, for example, we were predicting a 40k move from. Obviously, since then, so it made that target. It's then set up broader continuation patterns. Your markets will often go up and down in this kind of nestling head and shoulder manner. You see it play out all the time. We'll be talking about the three price predictions that we have on the screen here. Of course, 130k from a bull flag, 151k from an inverse head and shoulders, and then potentially a cup and handle. We'll show you plenty of examples of other charts that are basically showing us Bitcoin's future that we also predicted here on the channel. But not only are we predicting a good time for Bitcoin, just like what we're going to be doing in this video, we were generally predicting a good time for risk. You can see this is the S&P. We were very spot on in regards to the stock market. When you look at small cap stocks, they're very much aligned with global liquidity and ultimately what's going to drive that, which is the dollar, which of course I think Bitcoin is going to be a lot more sensitive to in many ways. You know, if we quickly go and look at the SPY from our kind of prediction, you know, it's done absolutely wonderful. You know, those targets were hitting, it's up, up and away. And you know, Bitcoin, I think, still has this kind of price action to come, but we will talk about all that throughout this video. So it's going to be a really interesting one. Really, this is going to be a comprehensive price prediction. We're going to be starting in regards to what's the macro drivers for Bitcoin to do well. And one of them is the cycles that overlay at the moment. So one of the big cycles, this is from Cross Border Capital, is global liquidity and the cycles. Now, we are expecting global liquidity to rise. You can see markets generally follow the liquidity cycles. This aligns with, of course, the Bitcoin 4-year cycle and what this is predicting. Remember, it's typically post-halving that you start to see those real moves in the cryptocurrency space. Bitcoin very much doing what it should be doing around about this time. You've got seasonality in markets. You've got a number of things going on. The anomaly, again, to cover it quickly, is the fact that institutions are here, and that's what's pushed it to highs pre-halving. But really, we always said this, when you were going to get to that prior 2021, 2022 high, I think this high was in 2022, wasn't it? No, November 2021 high. You were going to bump into resistance, very textbook, a previous level of resistance. It's kind of like markets go up and they've got almost branches above them that they bang their head on, and they form key levels of significance. So one of the macro drivers for us, not only do global liquidity cycles align with Bitcoin 4-year cycles, US PMI business cycles, Eurozone business cycles, election cycles, we can go on and on and on. We think the large driver of this is, of course, the DXY, the dollar, and its strength. Now, let me spend a moment on that. I did a meeting with my patrons yesterday. If you do become a patron on the back end of this video, or any of the others that we watch, go and watch yesterday's video abruptly, because we really give our general assessment of the markets, why we are positioned, the manner that we're positioned. We start the video off talking about some news in relation to a Bitcoin mining stock that we think is going to significantly outperform Bitcoin and generally the market. Potentially you are going to have altcoins that are going to do even better, but a 25x I think is pretty spectacular, not a guarantee, just something that I'm positioned for. The dollar and the DXY predominantly, which is the dollar versus other currencies, when that's strong, typically risk markets, not just Bitcoin, but Bitcoin is kind of the most sensitive. It's the most kind of schizophrenic of the risk markets. When the dollar is weak, the markets tend to go up. There's been an element of dollar weakness in every single Bitcoin bull market, whether that was 2020 to 2021 on the back end of all the stimulus, whether that was 2013, 2014, or whether that was 2017. And of course, dollar strength's typically bad. Of course, fundamentally, this makes sense. People are going to the dollars, they're going out of something. And when you see a currency weakening, certainly on the back end of interest rate cuts, which we know are coming, generally that's a positive environment because of the effects that has for liquidity on the markets. One thing that I'm very zealously watching is the fact that you have $6.6 trillion in regards to money market funds in the United States right now, a record high. I do think that's going to be coming down. Now, of course, a lot of companies hold cash on their balance sheets. They're going to have that in money market funds, of course, because it's giving them a yield on the back end of it, a nice yield. But there are a lot of people that when that yield comes down and that risk-free good return kind of comes down, they'll go and hunt for yield elsewhere. I think the markets are very much positioned for all this. So one of our drivers, of course, we've shown you how the DXY affects Bitcoin is, of course, the dollar. So global liquidity cycles, Bitcoin's going to do well in. Obviously, the Bitcoin 4-year cycle, which we'll come on to in just a second, and the dollar seeing further weakness. We've got technical targets to 97.3. The dollar is very, of course, sensitive to and largely led by interest rates. And you can see, if I put this on log to sort of line them up, that's very much the case. And that's fundamentally is the case because just like the dollar went up against other currencies because the dollar is has a larger debt market, so when they up interest by 25 basis points, it has a larger effect than Europe. The same applies to when they start to cut them. So we've got this good macro picture. When we talk about the BLX and we talk about the Bitcoin 4-year cycle theory, this is the best Bitcoin chart we've got from a time horizon point of view. The anomaly really here is where Bitcoin is in and around the halving. Typically, it's not made new all-time highs yet. Of course, it has this time due to institutional involvement, a very bullish aspect in regards to Bitcoin and the expectations of its price to go up. We've covered our kind of big macro reason. This is a good thing, but Bitcoin typically doing what it should be doing in and around a halving. So we do expect this cycle to play out in very much the same way that the last one has. So on top of that, the macro reasons that we've just spoken about, but we've very much summarized, on the dollar, if we can really go the whole hog on the dollar and why we think it's coming down, including looking at the Forex market. The Forex market can give us clues in regards to what's going to happen with the cryptocurrency market. So, for example, we've got Euro USD targets that are being followed. This is all dollar weakness, which in turn means a genuinely good time. If you're betting on crypto, you could kind of say you're betting on the euro strength or the pound strength because it's a kind of barometer for interest rates and thus what that means for the largest sort of market in the world. Doesn't mean these currencies are going up generally in strength on the back end of interest rate hikes because they're cutting at the same time. It just means the dollar's losing further ground as the biggest player in the liquidity game. Also, you know, JPY, I can show you 5 or 6 currencies that are all signaling to me upside. You know, there's potentially further continuation setting up here for these currencies against the dollar, which means the dollar weakness, which, you know, we've looked at very much bottoming the CAD against the dollar here. Also, Oz, USD. It's the beautiful thing about being a technical analyst. You kind of unlock the markets in a sense. So talking about the BLX, coming back to it, we spoke a lot about our kind of big reasoning and what we think the main driver of liquidity is going to be. It's, of course, going to be the Fed and in turn interest rates, and then currency. We also have the halving cycles playing out once again, at this time in a more bullish manner because of where Bitcoin currently is. So we have every reason to expect Bitcoin to continue to going up. Of course, certainly because it's generally in an uptrend. You don't bet against the trend, guys. This is a very strong uptrend. This pullback that Bitcoin's recently been having largely is in a very textbook descending. Pullbacks in an uptrend are descending. Pullbacks in a downtrend are ascending. Almost flag broadening wedge-like pattern. Very textbook, and it's very common that you do something like this. We're going to show you some examples when we give you our 309k Bitcoin potential price prediction. It's very common that when you reach a prior high, all-time high, you sell off and you pull back. You can see, and we'll look at this in more detail in just a second. Vanex Semiconductors did this. I can show you hundreds of examples, by the way, guys. I spent a lot of time looking at charts. You can see Microsoft. This was a stock that we got very right. We were also predicting this back, from down these levels. And you can see, obviously, gold is a big macro one. But this pullback is very textbook in its nature. You are in a broader uptrend. You don't bet against the trend. We've looked at all your macro reasons why we think you should be bullish and why we think Bitcoin is going to benefit, given the correlations with the Dixie, given what the Dixie's weakness is going to mean for global liquidity, what that's generally going to see assets do. When we look at Bitcoin now, we've really spoken, just to sort of cap all this off, about the big macro drivers. Now, when it walks, talks, and quacks like a duck, it's a duck. When we now assess technically what Bitcoin is telling us, first of all, we know it's in an uptrend. Do we have technical patterns and potential targets that are going to see Bitcoin go higher, certainly triggered targets, than where it currently is, which would very much align with what we've just looked at? The answer, ladies and gentlemen, is yes. So back when we were sort of assessing the markets back in March, I didn't want to go too far back through my YouTube. Back when we were technically assessing the markets down here, this pattern has very much played out and made its target. And you can see it became a key level of significance because you coiled up here. You formed what we think is a broader right shoulder that ultimately gives us a target, just like this pattern gave us a target, that is likely going to see Bitcoin run to 151k. However, since you sort of bottomed out on this right shoulder and ran up to all-time highs, which is always going to be a key level of significance that you were going to reject off, I do believe you very much formed a flag-like structure. So this recent pullback, in my opinion, is very kind of similar to a flag. Now, we haven't broken this flag, so the price prediction is going to be a little bit off, because obviously we're going to put the flag from the point at which you break. So the flag starts from all the way down at 38k thereabouts and tops out at 74. Once we break this, wherever it decides to be, you are then looking at potentially a Bitcoin that's going into the sort of 30k range on the back end of a bull flag. And the direction that's going to move in is in line with the trend. It's in line with the other things that we looked at. But it's also in line with this technical pattern that we have here, that we think is going to see Bitcoin go to 151k. And we speak about this price prediction regularly on the channel. You know, you can see Bitcoin very much on a cliff edge, but of course this is now an inverted chart. Again, what are these cycles that we've just looked at very predictive, or predicting Bitcoin's going to do? And then we have the technical assessment to say, okay, that's very likely going to be the case. And this is the beautiful thing about being a technical analyst. When a technical analyst, just as a pivot here, guys, I see these ding-dongs all the time. And they'll try and sell you indicators or things like this, where it's got like a green dot at a local low, a red dot at a local high, and they say, look, this indicator works to 100%. Technical analysis doesn't work to 100%. It works more than it doesn't, though. And when you're trying to predict what's coming next, you go with what's more likely. And when you have multiple things pointing in a similar or the same direction, you're a fool to bet against that, in my opinion. The odds are against you. And we're trying to stack odds and probabilities in our favor. And that's what we're doing from assessing the macro. Predominantly, we're a technical analyst, so we focus on the technicals. But when we look at technically the structure that Bitcoin is in, it points and aligns with everything else. And this is why we say, and we use it deliberately to almost be annoying, is when it walks, talks, and quacks like a duck, it's a duck. Because it's really, that saying comes from, there's more reason to believe that it's a duck, it's quacking, it's walking, it's talking like a duck, than not, if that makes sense. So there is likely a bull flag structure in here. I do think this is going to result in upside, just like we've seen many charts that consolidated and coiled, which we'll come on to in regards to our big price prediction. There is the potential, obviously, bull flag pointing to about 130k, depending on where we break. And, of course, big inverse head and shoulders that takes us to 151k. There is, however, the potential, and this might be my bull market price prediction for Bitcoin, that you do see, let's get some curvature on here, a cup and handle pattern potentially playing out. And I'm going to show you some examples of other charts, some of them already broken out, like gold, which is very close to the target that we were giving it. I do think there may be evidence that this is kind of a cup and handle-esque pattern. I think it's very compliant. I think it's very shallow, which is a good sign. And ultimately, if this is to play out, and if this is a cup and handle, which I think there's the evidence to suggest it might be, you are potentially looking at a $300+ thousand Bitcoin. Now, before we come on to Bitcoin miners, which we can kind of then add to our theory and thesis on why Bitcoin's going to go up, and stack probabilities in our favor that that's going to be the case. We're going to come on to miners and show you they're all positioned for upside. Obviously, Bitcoin's going to be a major part in this, and its price, because what are they mining Bitcoin if it's going down? Typically, there's going to be a correlation there. But before we do that, I do want to show you other examples of charts that were at one point where Bitcoin is today that went on to see higher prices in a cup and handle-esque pattern. So this, of course, is Vanex Semiconductors. Some of you may be familiar with these stocks. Some of you may not. It's not really important in regards to the underlying stock, more technically how these set up. You can see this was a stock that we had great success for, certainly down here. We like to teach something called phase analysis in our market mastery course. I think there's still 80% off it. If you do want to join that, of course, then get in the Patreon, get active, get showing me these things, and we'll give you feedback on what we're seeing. But we like to see some market moves in 4 phases. So this is then we can add technical patterns onto it. But if you look at the run that semiconductors had, and let's do something interesting here. This is very much a Bitcoin-esque chart. Even in regards to this pullback here. We've got a lot of draws on here. Let's take some of them off. There was lots of sort of overlays in regards to targets. Again, inverse head and shoulders. We've got huge success with these patterns, also on the downside. You can see the kind of descending flag-esque structure in very much a broadening Bitcoin-style fashion that Vanex Semiconductors went on, and it did that around the highs, and it potentially is set up. Still got to get there. We're showing you really the future of what's to come for Bitcoin. Remember, we've covered a number of reasons in regards to why we think it's going up. Remember, this is not a check you can take to the bank, just my technical assessment on things. You're very much set up in a Bitcoin-esque manner. And if we go ahead and get rid of this, you can see what that then eventually led to. Inverse head and shoulders was hit, so this is 150k for Bitcoin. And then you saw broader continuation. And you're still seeing broader continuation. We still think Vanex Semiconductors got very close to its a cup and handle target of 310. it got all the way to 284. I do think it will get there. Something to watch here, but it's a good sign that your right shoulder has obviously gone significantly higher if this was to play out to be one. I still think this is going to be the case, but you can see what I'm kind of showing you. This is very much the future that Bitcoin has ahead of it. Another great one for us was, of course, Microsoft. Again, we see a very similar thing. So, also bullish on Microsoft means we're generally bullish on risk, which means that crypto is going to be the best performer in that kind of arena or that pantheon. Again, run into all-time highs, a descending pullback in what is a broader uptrend. This one very much more, I think I even covered this on the daily when we were looking at this in August. Breakout, and this has got higher prices to come. Looking at doing a similar thing to what we just previously did. You can see that you can really see and sort of get a feel of what I'm showing you here. And then, of course, gold. Gold is a big macro pattern. Ultimately, there was an inverse head and shoulders here. The target for that we're very much marching towards, but there is a bull flag pattern on the back end of this, of course, in regards to, let's just finish off on Microsoft just to show you a few things. Where's our curve? And typically very shallow cut handles, which is what you want to see, because you want the markets to give you clues in regards to what direction it's going in. And you're seeing that with Bitcoin. It seems brutal because certainly for myself, I'm predominantly in the altcoin market because I think it's going to offer a higher ROI in my own personal opinion. You don't need to follow me into that. But this is what we're predicting is on the path for Bitcoin. You can see this gold as well did it. It's, this went slightly higher than the all-time, just like Bitcoin did. But you can see the similarities here and what we're highlighting. And the eventuality of where these similarities lead. Also, to perhaps, because we've gone on for quite a while now, guys, because there's so many reasons why we're bullish, and we wanted to give a kind of predictive video in regards to where we think Bitcoin's price is going. Really be comprehensive with why we think it's going where it's going. Show you why we think it's going there in our own assessment, and give you a number of reasons in regards to why. Again, when it's more probable that something's going to happen, we take that as technical analysts, as traders and investors. If we just look at some miners, just to sort of wrap the video up very quickly, because we've gone on for a while now, guys. I'm appreciative of your time. Again, if you want to become a Patreon, we do have some miners that we think are going to do exceptionally well. When we look at something like Marathon, I'll get rid of the volume by price. I know what I was looking at there. You're looking at a good time for this. $116, very likely, in my opinion. When you look at something like Riot's one of the weaker ones, unfortunately. Something like Wolf, this has done very well for us. Something like Hut 8. Let's pull up Iris Energy. I don't think they're called Iris anymore, are they? Textbook breakout, retest, ready for continuation. That means Bitcoin's likely going to be doing well. So there's a number of reasons to expect Bitcoin to go higher. Our price predictions, of course, in the more immediate term is 130k-ish. We'll know exactly where once we've broken this flag-like structure. Then this inverse head and shoulders likely take us to 151k, and then there could be the potential for this broader macro pattern that takes us to $309,000. Now that would be spectacular. We do think alt season still is to come. Alt's very much where they should be. And that's it from me, guys. A comprehensive Bitcoin price prediction video where we've told you exactly why we think it is, from the large part to the small part. And the stars for me are very much aligned, just like they were back in the sort of 16k range when we were predicting an uptrend for Bitcoin. And then we started to add technical targets that formed on the way up. And we're still going with that today. And the trend is your friend. Don't bet against it. On that note, guys, I'm going to love and leave you. Thanks a lot for watching, ladies and gents. I will see you all in the next one.